Good afternoon, everybody. Welcome to this week. And boy, what a week it has been. A lot of stuff going on in the news. We got a lot of news stories. We got a lot of news stories. In fact, we normally have 7 stories. We have 8. We've got 8. So one of them, of course, was a little bit on the more late breaking side. So we got lots of stuff to cover. We're gonna jump right into that to the very first story. We're gonna jump in right away. Let's get it done. Let's get moving. All right. So that big, beautiful Canadian bill. Of course, we're not calling it that. We're calling it the One Canadian Economic Bill. But I'm calling it the One Big Beautiful Canadian Bill just because it's kind of a response to the United States. A lot of what's going on in this bill, well, it's all because of those tariffs. It's because of the way our neighbors are treating us. And it's a little bit of a wake up call. It's a wake up call for Canada to get our butt in gear, get, you know, get free trade across the country. Interprovincial trade needs to be free, and we need to be building. So, Carney, he had an election. He won an election based on the stuff that's in this bill. This is the stuff he promised to do. This is the stuff we're starting to see. So there's two big things that are in this bill. The first of call is all of that free trade as well as labor mobility. Basically, what's labor mobility, you might be asking? If you have a specialized job, sometimes currently you might need to get certified in each province to be able to work. So part of the idea of this bill is to sort of eliminate that. So if you're a nurse in Nova Scotia and you want to work in BC, there shouldn't be any issues. You should be able to work wherever you want to work within the country. So that is part of it. The other part, of course, is the Building Canada Act. So the whole idea, of course, is that infrastructure, getting things going, turning us into into an economic superpower. That's the goal. So, of course, we're looking at a few things. We're looking at removing federal barriers to internal trade, and the provinces are also doing the same thing. They are already, oh gosh, there's already a lot of deals. Doug Ford's been out there just peddling new deals, left, right, and center with other provinces to get all of that red tape, to get those barriers down. We're also, another key thing in this thing is, not in addition to that, when it comes to the building side, we are looking at fast tracking some of those major, and they're calling them nation building infrastructure projects. So it's not like we're going to remove the red tape on absolutely everything, but it's on the things that are basically in the nation's best interest. And that's going to be interesting, I think, in the long term, to figure out, how do we determine if it's in the nation's best interest? So that's going to be one of the key things as we move forward. Now, one of the goals, the overall goal, as I mentioned before, well, making Canada the strongest G7. So that's their goal, the strongest G7 economy, by boosting 3 things: productivity, energy security, and our overall economic competitiveness. So we want to be competitive on the world market. And that's important. Like right now, if you just use oil as an example, that oil that we're selling to the United States at a discount, that's not being competitive. Well, it is. We're winning that race with them, but it's not being competitive in the fact that it's not fair to us. So this is going to be really, really interesting. So let's talk a tiny bit about the project approval. So as I mentioned, a project has to be in the nation's best interest. So to do that, you're going to need some kind of a project approval process. And according to the bill, according to Carney and his things, it's not going to focus on how a project, it's not going to be focused on should a project be built, but rather on how it's going to be built. And that's the right question to ask. Don't ask, well, should we do it? Ask, what will it take to do it? And I like that. And they want to cut the overall, so the federal approval timelines, basically right now, it takes about 5 years to get all of your federal approvals done. A lot of it's because they don't do everything at once. If they have like 3 different environmental studies they need to do, they'll do one. then the other, then the other. Not anymore. With this bill, they'll do them all simultaneously. So that way there we can cut back on a lot of time. So they want a maximum of 2 years to get through all of that red tape. I like it. I like it. Now, some of the criteria for approval is the project going to support our national resilience? Is it going to provide economic benefit? And will it also provide indigenous interests? So we want to make sure as well that the indigenous folk are in on this as well, which is good. They also want to advance climate change goals. Just don't get bogged down by them. That was kind of the problem with, I guess, the Liberals under Trudeau, is that they kind of trumped everything. And, there's ways, for example, when it comes to oil, you'll look at oil and you'll be like, oil is dirty. It adds so much carbon to the atmosphere. But the same time, all of these oil companies, guys, they're developing carbon capture technology. So the carbon that the oil they're pulling out of the ground is creating, they're trying to offset that. They're trying their best to offset that. Is it perfect? No. But that's other research, I think, that needs to continue in that direction. There is a lot of research on carbon capture, which is definitely a good thing as well. Now, there is going to be a new federal, it's basically a major projects office. And those guys, they're going to be basically in charge of coordinating these reviews, creating, and this is kind of key, a single set of binding conditions for each project. And that will also have an Indigenous component. So I believe it's going to be an Indigenous Advisory Council that's going to be in there. They will provide capacity funding as well. And basically, one of the things that they want to do is, with the Indigenous folk, is let them be shareholders. Let them make some money out of this too. I mean, and I think that's fantastic. Absolutely. Definitely a great way to get everybody on board. All right. Now, coming back to those internal trade barriers, because that's also part of the bill. So this is a big bill. What we want to do is what they want to do is they want to establish a system where basically comparable provincial rules are basically equal to the accepted federal ones. So we want to basically streamline right across the board. So streamline regulations from coast to coast to coast. Help, and that of course is going to help businesses sell goods, services pretty much right across the board a lot easier. So for many businesses right now that have their hands tied and they can't sell their product to, let's say to Ontario, this is going to open up a lot more markets for a lot of our internal, provincial wide. This is fantastic. I'm loving it. Now, I also mentioned as well about the labor mobility. So we're going to allow people to be able to move much more easily. So if you want to work in another province, you shouldn't have to jump through a bunch of red tape to make that happen. So they're looking to create a national framework to recognize licenses and certifications. Workers that are improved in one province will be able to work in a federal jurisdiction without any kind of added steps. And this will make it easier, of course, for skilled workers to basically move where they're needed. Let's move them where they're needed. Let's not tie things down. And of course, why is this all important? Internal trade right now, it amounts to about $500 billion a year. So that's about 20% of our overall GDP. And as I said before, the current system, it limits the growth on that. And there's no need to be limiting our growth at all. So let's see what happens. Of course, Mark Carney has come out with his little pledge on this to build big, build bold, and build now. So far, he's starting to walk the walk, but I'm going to hold him. I'm going to hold him up to this. I will say one thing that really did disappoint me. In the actual press conference for this, he had Chrystia Freeland standing up there. I thought that was a bad move. I'm like, if you want to distance yourself from the old Liberals, try to get some new faces around you, or at least not the more unpopular ones. Don't have them up there, but yeah, it's pretty good. It's pretty good. All right, whew, let's get into the chat, guys. So that's kind of that new format. I want to do the first story right out of the gate, get it done, and then we'll move into the chat. Like I said, story number 2. If it takes an hour to get there, it takes an hour. It's up to you guys. All right. We got Jonathan in first with, am I late for just a big, beautiful bill on Capitol Hill? Well, technically, I guess our version of the song would be, I'm just a bill sitting on Parliament Hill. Yeah, there we go. Oh, that's me. King of Day says, hello, everyone, and happy Sunday. Hi, King of Day. Good to see you. I saw you made a comment. King of Day made a great comment over on Blossom. I'm not going to tell you guys what it is. So go check it out over there on Blossom. Link below, of course, if you want to sign up and check it out. But a huge accomplishment for King of Day over there on Blossom. Bismarcky saying happy Sunday to one and all. Jersky says, stopping in for a quick fix. I'm moving cows to pasture today. Oh, yikes. I see moving cows as being a slow process. It's like move along. Oh boy, that was bad. All right. Paul says, good afternoon. Is that the Bill character from the 1970s, how a bill is put into law for the USA? Yes, Schoolhouse Rock. It's actually funny. I was thinking about the bill, and I was thinking about the name of the show for today, and I was like, that just popped into my head, and I'm like, you know what? I've got to work this into the show. We got a little Canadian version of the bill. So what can we say? All right. Zyborg. Hi, Zyborg. Good to see you. Says tearing down provincial barriers for professional designations. Quebec ain't gonna be happy with that. Can't get a license to tie your shoes there without language proficiency test results. That's a really good point. And that could be a little bit of a snag-foo in this whole process. So yeah, we'll have to see how that's all going to work out, because the language police in Quebec, they're not very forgiving. Let's just say, we'll say it that way. A is in the house with a good afternoon. And let's see. Jack says, we needed PP, but at least Carney supported the oligopolies, making it easier for us investors to pick winning stocks. Yeah, absolutely. Yeah, I mean, it's actually interesting. There was an Pierre Poilievre gave an interview after the announcement of this one bill. And a lot of what he said is, he didn't say that the bill was bad. He said it just didn't go far enough. That's what he said. He said, you know what? I guess it's hard for him to come out and sort of support it. But at the same time, he was just like, well, you know what? I agree with some of the stuff, but it needs to go much further. That was his opinion. I'm happy with it as a first step. I want to see this all in action. Now, the goal with that bill is to have it passed by Canada Day. That's what he's aiming for. So we will see. It's like Canada Day seems to be that one big target. We'll see. We'll see if he can get it done by Canada Day. I'd like to see it happen. And is Poilievre right though? Do we need to go further? Probably. We probably do. But from this government, from a liberal government, to at least get on this amount of a journey, is good. It's good. It's a good first step. It is definitely a good first step. Jack says, BAM and NPI going to be the best performing Canadian stocks at the end of this liberal term. So yeah, Brookfield Asset Management and Northland Power. Yeah, there's a lot of people think Brookfield Asset Management is going to do really well because of the affiliation of Carney with Brookfield Asset Management. Now, it is in a blind trust, but I don't know how much you can trust those. The fact is, if I let's just say if I became the prime minister and I had to put all my assets in a blind trust, and let's say I knew I had a lot of Air Canada when it went into the blind trust. Well, my blind trust is probably not going to sell things, because I would probably, before I put anything into a blind trust, what would I do? I would put them all into a set and forget state. So, there'd be nothing that needs to be sold. It could just sit there and grow through the term. So, yeah, there going to be some bias? Well, maybe, but we'll see. We'll see how this all goes. But nonetheless, I still think, even before Carney came along, even before all of this, fuss over him and his blind trust, I still thought that Brookfield Asset Management was a really good investment. I still do. For sure. So, A says, why has natural gas got so expensive? Where can you find information regarding news on outlook for natural gas and oil? All right. Good question. Honestly, when we're looking at, oil right now tends to be a little bit down, but yeah, natural gas definitely. I think if you're looking for actual news, I do it a couple of ways. Like with the Globe and Mail, for example, they have categories. So, for example, you can go to the Globe and Mail and you can look up investing. It has a lot more investing directed stories. You can also through something like TradingView, if you look at individual oil or natural gas stocks, you'll get all of the relevant news that involves them and as well that industry. So you will get a lot of news that way. Now, with stuff like, for example, ChatGPT, with the newest version, you could pretty much ask for, can you pull up can you bring up the Coles notes of some of the news highlights regarding natural gas? So you can pull up, it'll save you a lot of work. Save you from having to go through tons of stuff for sure. And let's do it. Let's just do it here for a second, just to sort of show you how kind of easy it is here. All right, we'll pull this up here and we're just going to go into ChatGPT. ChatGPT. Here we go. All right, here we go. I'm just going to ask a really simple question. Can you give me just headlines? All right, for recent news regarding, and I'm going to put Canadian natural gas. So it's all pretty simple, and ChatGPT will then go off and browse all kinds of stuff. And the beautiful thing is, and this is what I want to show you here. So here we go. So here's Canadian natural gas news, and you can sort of see stuff coming up. But here is what's really great, is you get links to the articles it pulled these from. So even though, and you guys have probably heard, like things like ChatGPT, they can hallucinate occasionally. But in this case here, look at this. Here's the first story. Canada's transition to 100% electrified energy puts natural gas into new context. Well, I'm going to click on this here, and you'll see the article right below there from energynow.ca, and there's also one from cleantechia.com. Prime Minister Carney and Premier seek to fast-track energy, and that's coming from Reuters. Now, you can click on that, and it's going to actually bring up that article that it pulled that information out of. So instead of going hunting for tons of news, just get ChatGPT to bring it all to you, and then click on the stories that do interest you and get it over there. And it's funny, I'm thinking like, gosh, why haven't I been doing this when I'm searching for news for this show? But yeah, that's an easy way to do that, eh? Very, very, very easy way to go. All right. Let's see here. Roku is in the house with a good hazy afternoon all. Yes. So one of the things that we have been seeing here, at least in Ottawa, and I think most of Ontario, is we're starting to get some of that smoke from the prairies. It's been coming through. So it hasn't been that bad. I could smell a little bit of smoke out there, I think, yesterday, but it really hasn't been that bad. But it's happening. All right. Gim says, if the bill goes through, Is it even worth investing in US stocks anymore? 50% withholding tax, yikes, might also apply to interest bonds too. Okay, so yeah. So the big, beautiful bill, so going to the US bill. So yeah, the ramifications in that, for one, it's only for if it goes through, if it passes, it wouldn't, the first part of it wouldn't even come into effect until January 1st. And they're going to increase that withholding tax in increments of 5% a year. So basically, if you're holding something in a non-registered account or your TFSA in this case, instead of on January 1st, instead of a 15% withholding tax, it would be a 20%. The following year, 25. But yeah, it works its way up to 50 down the road. It'll take a long time to get there. Right now, and there's speculation, is the RRSP safe? It's gray. It's gray. There's nothing in there that says that it's going to be impacted, but that could change. So as of now, it's still safe. So we'll have to look. Now, mind you, this maneuver by Trump, he's not even after our money per se. This is a retaliation for the digital sales tax. So if Canada drops the digital sales tax, this goes away. So we'll have to sort of see how that is all going to work. Now, another thing that's interesting too, guys, is, and I got a news story a little bit later about this. There is some talk behind the scenes between Carney and Trump about the framework of what a trade deal is going to look like. So that, I'm hoping that that's being addressed in that as well. We don't know yet. But we'll talk about that here in just a little bit. Do not say that long name person out loud. All right. I'm not going to say, yeah, I got it. Let's see. I have the most obvious fake funny name ever. I think a preschooler would suss that out without a warning. And Cyborg is like, yeah, do it. Why not? Here's the funny thing. When I'm sort of concentrating on the news and all of the comments, I could accidentally fall into a trap. I could absolutely, it could happen. It didn't, but it could. All right. Holy cow. Let's see. He isn't a new liberal, though. Why would he not let them around him? Yeah, it's not even so much that. I think it's just the unpopularity of Chrystia Freeland in particular. When I was watching that, I was just like, oh, that's a bad choice. Because you're trying to distance yourself from, and you could argue that, with Chrystia Freeland turning on Trudeau at the end, maybe it's not such a connection, but I still think, I still think she shouldn't have been up front and center at that press conference. That's all I was saying about that. All right, we have John in here who's in crypto. Absolutely awesome. I love crypto. Mary's in the house, guys. Mary's the official captain of our like button. So that means if you have not yet hit that like button, now's the time, because I'm gonna have some coffee, because Mary gives me that coffee sip break as you guys hit the like button. So good. So good. Litecoin to the moon. Good old Litecoin. You don't hear much about Litecoin anymore. That's for sure. Jordan how is Candace today? I hope you're doing well. I'm doing fantastic. How are you, Jordan? It's always good to see you. And how's the glass going? And more importantly, do you have a plan in place in case we get another mail strike? Because I know last time with the last postal strike, poor Jordan wasn't able to get any of his glassware out to his customers. So hopefully you got a plan. John says Trump for the pump. Interesting. Now, mind you, with crypto, we had quite the drop when Elon and Donald Trump went at it the other day. It plummeted. But for the most part, it has mostly recovered that as everything calms down a little bit. So that's what we're going to find out. All right. Jonathan is saying, I imagine herding cows is easier than herding cats. I don't think. I don't think you could herd a cat. Cats don't. I mean, yeah, you could probably lead some of them with if you had some tuna or some treats or something. But oh boy, as soon as one of them decides it doesn't want to, or if you get that finicky cat, yeah, no, absolutely, King of Day. Yeah, I was just like, I read that earlier today. What was going on with King of Day, and I was like, oh my god, that's so very very cool. All right. Quebec needs to separate. The fake separatists really voted to keep the corrupt libs in power. All right, and let's see. But whatever, let my BAM position rip. There we go. There's your silver lining. Your silver lining. Paul says, when I was a kid, I had a 70cc off-road bike. We went camping at a place next to cow fields. On the motorbike, you rev when rear tires hit cow patty and it goes flying to the people behind you. Okay, well, here's a funny story. So I was we're doing some drop. We're out in the country, and this is during recycle. We're doing this recycling thing, so we were just delivering some flyers to people. So the guy who was driving me around for this project, we were going by this field, and there was all these black cows in it, and I'd never seen a black cow. I had never really seen a cow up close. I said, "Well, let's stop. I want to see these cows." And me being from the city, him being local, he was just like, "Okay, sure, whatever." So I walked over to the fence, and I'm standing at the fence. I'm looking at all these black cows, and one of them seems to be looking at me. And I'm like, okay. And I'm like, come on, cow. And I start patting my hands on the fence. Well, little did I know, it was one of those fences that every so often sends a little electrical shock through it. Next thing you know, zap, I'm on my butt. I'm like, oh my God, I can't believe I did that. It was very stupid, but it's actually funny to look back on now. I now know about intermittent current in these fences that a lot of the farmers use. So yeah. Anyway, I no longer have any desire to say hi to a cow after that. MC is in the house. Good afternoon. Just got back from fishing, catching up on 1.5. Awesome. Did you catch anything though? That's the big question. Did you catch any fish? And if so, what were you fishing for? Mario says, good afternoon, everyone. Well, hello, Mario. Good to see you. Muddy is in the house with a hi all. We got Lisa in here saying, good afternoon, everyone. I love it. All right. So good. All right. Let's see. Jack says, I would choose to let the public know what all I own. Screw a blind trust if you are a politician. It honestly shouldn't be allowed, in my opinion. Every politician's investments should be public info. Yeah, I would agree. Kind of like what they do in the States. Like a lot of people, I think for a while, everybody was following whatever Nancy Pelosi was investing in. People were sort of mirroring her thing. I think that would be fine. Like I would be okay with getting rid of a blind trust, but having it public knowledge. Like every trade you make has to go, has to be put in front of the public. Yeah, for sure. Let's see. Have you tried Gemini? I vastly prefer it to GPT. I haven't messed a lot. With Gemini. Mostly GPT. Also, I will use as well Grok over on X for the simple reason that if I want to make an image for like the news, if I want to make an image of Donald Trump, usually I get a bunch of guff from ChatGPT saying it's against our standards. While over there, Grok will just make whatever I ask for. So I kind of like that. But no, I absolutely do need to play a bit with Gemini because I've heard a lot of people online complete raving about Gemini. Politicians never lie. Oh boy, that's a name. That is a name for sure. Let's see. Carney hates oil, gas, natural gas, gold, uranium, and copper. Oh boy, yeah. You can tell, like there's a saying, when a politician is lying because they're moving their mouth. Um, yeah. It's kind of one of these things. Like, I know that Carney has in the past said a lot of negative things towards that, and so far though, he appears to be moving in the right direction. Let's get, as long as we get this stuff. I don't, honestly, I don't care who does it. We can put a monkey in Parliament. If that monkey passes at least a few things to move us towards some of the goals that I want to see for Canada, then I'm okay with that. But yeah, what can I say? All right. Jack is not the fan of Carney for sure. Let's see. Kevin Cass says, good afternoon, gang. Muddy says, I lived in Manitoba and Ontario. Manitoba Hydro was far more economical than the prices I paid in Ontario. Yeah, I can believe that. I can believe that. We got Larry. Larry's in the house. Why, hello, Larry. Unga Bunga. I like it. Oh, I love it. Let's see. Fires intentionally set. The arson should get a minimum of 50 years plus hard labor. Yeah, there's no. Here's the thing. If you're setting fires, and setting woods on fire, setting the forest on fire, creating wildfires that impacts massive communities, I got no mercy for you. I got no mercy for you at all. You know, it does. No, you just can't do that. You can't do that at all. And yeah, I got no mercy. No mercy. There's nothing else I can say about that. All right. Muddy says, glad to hear Carney and Trump are talking, hopefully for some movement. And that's what we're going to see. We're going to see what's going on with that. We're going to see, what concessions Trump is going to make us. Well, what concessions Carney's willing to make to get a deal with Trump. Let's see. Who's more beautiful, Freeland or Carney's wife, or an anteater? I got no idea. No idea. All right, let's jump ahead of the anteater talk. All right, Carney's wife was recently. Okay, guys. All right, I'm gonna jump ahead to some sanity here. Jordan says, haha, my plan is to retire from glass until things level out and I can afford the raw materials again. My torch hasn't fired in 3 months now. Oh boy. Oh, that's interesting. That's interesting. Oh, but at the same time, Jordan, I don't blame you. I don't blame you. Yeah, let's get a little bit of sanity in the system. Even with right now, I haven't heard, like, there weren't any real updates on what's going on with Canada Post and the union this week. So, boy, yeah. Yowie, that is the point of the expression. Treats help. Absolutely. Jack says, I miss the days of seeing who could hold the electric fence the longest. Oh boy. I'll tell you, now that you mentioned that, it reminds me of something else. Back when I was in Sea Cadets, this one guy, he just decided that he was going to pee on an electric fence. Gosh, needless to say, that was a mistake. Funny. It was funny as hell, but it was a mistake for sure. Meowie says, okay, also Freeland is the Minister of Interprovincial Trade, and the bill does have that in it. All right, fair enough. I was just, this, like I said, that was more of a personal opinion. But yeah, that's fair. Rory, I did that as a kid. No wonder my nerves are shot. You guys gonna join the Empire or what? Oh gosh. Yeah, it's interesting. It is absolutely interesting. Jack says I still check in on the Pelosi trades. Why not? I'll tell you, if you want to check in on trades, Larry's the person to watch. Larry makes a lot of good moves. Rory says Larry's empire of trading, portfolio management, and associates. There we go. I know, Larry, you're doing fantastic. Let's see. The videos out of VEO are hilarious. Awesome. I don't know if I've seen any yet, but I'll have to take a look. Let's see. The image generation in Gemini 2.5 Pro is extremely impressive for free. Yeah, I gotta take a look. One of the things I'm really interested in too is just some of the video stuff, because as you guys know, I got a few videos from Sora on here, like my goat videos. So when somebody drops like a super or if they gift a membership, that type of thing, I pull up one of the goats. But I'm always looking to get some better stuff for sure. Andrew says Globe and Mail can be a Wealthsimple reward. I'm debating between that and the Willful thing. Yeah. Good old Wealthsimple. Let's see. Take a sip while we hit like 50% like rate. 50% like rate at the moment. I will do this. Vic wants me to take a sip, guys, while you're hitting the like button. So let's do it. Oh, gosh. All right. Let's see here. There's a massive difference from arsonist and from accidental forest fire. Yeah, absolutely. And that's the kind of thing. When I say no mercy, you gotta, if there's intention, if you accidentally start a fire, even through stupidity, yeah, I can forgive you, but if anything, if it's intentional, if you're like trying to create a wildfire, I got no mercy. As far as I'm concerned, you shouldn't be free. You shouldn't be free. Let's see. Vic is saying, take the Globe and Mail reward. Bismarcky, is that Folgers in your cup? No longer available at Loblaws. No, it's Maxwell House. So yeah, I heard about that Folgers, and I'm just like, thankfully, I do not drink Folgers. All right, MC says, yes, I caught a couple of smallmouth bass. Nothing much, but it forces me to go outside. Well, you know what? It's better than catching nothing. I hear of a lot of people who go out fishing. They'll spend the weekend fishing and come back with nothing. It's like, yeah, that's not too bad. Not too bad. All right. Jonathan says, don't whiz on the electric fence. Exactly. All right. Let's see here. Orleum Corp is bringing value to the shareholders. It's not as cool as Berkshire Hathaway's, which is Berkshire Hathaway, a fistful of dollars. I like it. All right. Roku is saying, I have a Gemini Pro account for 1 year. I actually got a better first answer from chat than Gemini. I had to add some additional info to Gemini to get closer to what I was looking for. An RRSP meltdown. Oh, yes. A good old RRSP meltdown. Actually, one of my top performing videos on the channel is an RRSP meltdown one, but that was your guys' fault. Well, not your fault, your credit, because you guys were like, do it, make an RRSP meltdown video. And I did. So what can I say? Politician says, buy what Pelosi buys and win every time. Pretty much. Oh boy. Let's see. Anyone look at VOYG, a June 11th IPO, space defense company that works with Palantir, NASA, Lockheed Martin. Ooh, that sounds interesting. Let's just take a look. I don't know if it's going to show up here in here, but let's take a look here. So what is it? VOYG. So Voyage. Okay. I like the name a lot. Oh boy. Let's try this again. VOY. Nope. It's not at least coming up yet here. It was, you said, oh, it's a June 11th IPO. Never mind. That's why. I should read everything, Jack. I should read everything. I like the name. But I will say this, with an IPO, I'm always very, very hesitant, because a lot of times you get so much excitement at the beginning, it inflates the price. And then it falls back down to its fair price over the next little while. So I like to wait until it's fallen back down to wherever its fair price is before I even contemplate jumping on board. But I like the sounds. I like the sounds of this. Space defense. I think there's potential there. Let's see. I'm going to add a small position to hold long-term and check back in on it. Yeah, there we go. I would almost say, Jack, as I mentioned before, you normally get that little bit of excitement and then it drops down, I would say wait about a week. You'll probably get it you'll get a better entry point, no doubt. Let's see. Paul says, anyone buy the Tesla dip? We've recovered about 4.5% since Thursday. I believe Larry got in on the Tesla dip. I remember. I think he mentioned that on Friday. All right. Let's see. Any Tesla owners need re-education? All right. This week, gold and silver fall. S&P goes up. Just saying. Yeah, exactly. People who were like a little bit afraid putting their money in gold, silver. As the market seems to stabilize, they'll pull a bit of that out. So we will definitely see that. We're going to probably see those two. We're probably going to see them switching positions a lot as we got a lot of volatility ahead of us. So Paul says, let's see. Questrade is going to have 24-hour trading later this year, but to start, they increased the pre-market to 4 a.m. Eastern from 7 a.m. Eastern. That's 1 a.m. BC time. Yeah, I mean, it's kind of interesting. I know I was listening to somebody talking about this probably a few years ago, that it would be very interesting if the stock market one day sort of follows the way crypto works and, runs 24/7. Don't know if that'll happen, but at the same time, I mean, there's been a lot of improvements, but just like, for example, the fact that everything settles now a lot faster. It used to take, like when you sold a stock, it used to take about 3 days to settle. Now it just takes one. And they're even looking in the future to get that down to sooner. And really, it doesn't need to take that long. The reason it used to take 3 days is because, well, back in the day, before the computer and everything, you had to actually take stock certificates and move them from broker to broker. And yeah, it used to take a long time. But right now, I mean, there's no reason why it can't be instantaneous. Andrew says, glad I bought ALV.V, so Alva Petro. Now that May gas is going higher. Yeah, this could be a good month for Alva Petro. And I do like Alva Petro. We've talked about that quite a bit. All right. Larry is saying, I think oil jumps with July 4th coming. Absolutely. And guys, I will point out, guys, in the chat, I am going to, if you're replying to somebody else, I'm going to probably be jumping over to you when it's busy. So if I don't read every little reply, don't worry about it. Don't worry about it. It's just me trying to keep up with the chat in particular. Now, if you do have a question that is absolutely pertinent and you want to get it through, there's always a super chats get priority over everything. All right. Rory says, let's see, Questrade is still sending me news, but I don't care what they do or think. Yeah, you'll probably be on that mailing list forever. I don't think that's ever going to stop. All right. It's on the New York Stock Exchange. All right. No problem. No, I'd be able to see it if it had already been active. All right. And yeah, exactly. This is a great point here from Wayne. So all of this extended trading, it's not for any of the Canadian stocks. The Canadian stocks still follow the regular Canadian hours, but it's with the U.S. markets, your U.S. markets. Jonathan says, my first stock was an IPO. My worst stock was that IPO. There we go. There we go. Yeah, sometimes IPOs can be a little bit dangerous. Yeah, absolutely. But sometimes they could be gold. Well, I mean, look here, politicians. Their first stock was Facebook IPO at $38. And we'll take a look. Well, heck, let's take a look together. Bring it on up here. Meta. It helps if I type META. Here we go. Let's see. Oh, I was like $38. Look, but that's the hedge. Where the heck is it's not showing me the regular Meta. All right, let's actually, I'll just type up Meta platforms. All right. Met you. Oh, that's interesting. I am not All right. I don't know what's going on, guys. I don't know what is going on. It's just not doing what it should be doing. All right. You know what? Let's just jump over here. I've got Meta in here somewhere. I know I do. I know I do. Or at least I thought I did. Maybe I don't. Maybe I don't. Yeah, here it is, right here. Yeah, so look, $697. There we go. That was what I was looking for. Not sure why. I'm not sure why TMX was not finding it. It was finding the CDRs and everything else. But yeah, look at that. That's fantastic. You bought it at $38. I'd say you got your money back and then some. All right. Reverend Ramirez says, hard not to ignore all the recession talk warnings from all the YouTube fin creators. Is everyone going bearish? What do you think? Here's where I'm about to go bearish a little bit. I'm going to go bearish a tiny bit. Is a recession in the cards? Probably. Is it going to be a bad recession? Hard to say. I can't give a lot of certainty on what's going to happen. We're kind of in a very unique situation. However, if we get a trade deal sooner than later, then, and if that trade deal gets rid of the tariffs, then there's still going to be a lot of damage, but it could be mitigated quite a bit. So that will determine whether it's going to be a really rough recession or whether it's going to be more of a mild recession. It's not going to happen anytime soon. Like our last GDP was still in the positive. So right now, quite literally, a recession's probably closer to the end of the year, maybe even the beginning of 2026. So it could very well happen. But at the same time, it doesn't hurt to have a little bit of defense, but I don't think we're at a point right now where you have to sort of start selling everything and, batten down all the hatches. Oh, I will make videos on battening down the hatches, but are we there yet? No. Can we stop it from happening? There's still a chance. It's not likely, but there is certainly still a chance. With the United States, I think they have a better chance if, and this is the big if Trump can start, either hammering out deals quickly and, sort of moving out back from tariffs because he's got all these deals in place. But even then, I don't think you'll have you might have recession-like behaviors in their economy, but it might take a while to actually have a recession called in the United States because right now the economy is still pretty strong. You could say that, job growth is slowing down. Yes, but it's still up there. Their unemployment is still sitting around 4.2. So I think the United States is fairly strong at this point in time. So let's see how this all happens. I think definitely, right now, Canada is the United States' biggest partner. So if we could get a deal between Carney and Trump, that will be good for both countries. That'll be good for both countries. Now, we may not like the terms of the deal, but that's why we got this new One Canada bill to, start ramping things up on the back end. So that way we can become much more sustainable and we can open up a lot more trade with everybody. So, yeah, so I would keep recession in mind, but I wouldn't get to the point that I'm being that I get fear mongering. I wouldn't sell everything, throw everything in cash. I would not do that at all. Now, would I take profits? Yeah, I'll take profits now. Will I put some of that into cash? Sure. I mean, eventually a recession will be here, and it'll be nice to have a cash position to use on that. But for the most part, I wouldn't. Don't get too concerned. Don't get too worried yet. And that's the key word is yet. So, can we have a bit of bullishness between now and that recession? Yeah, absolutely. I mean, if you look, and let's look. Right over here. Here's the TSX. This right here. Look at this. This here was on Friday. On Friday, the TSX hit a new all-time high. So we're not falling. We're by in no means falling. We are at all-time highs. Now, for us even to get into a bear market, we need to go 20% down. 20% down before we're in bear market territory. So, I think we have time. I think things are not going to be as bad as a lot of people put it. But like I said, just be cognizant that a recession is coming. And quite honestly, Reverend Ramirez, no matter where we are in the economic cycle, a recession is a normal thing. So there's always a recession coming. Always. It's just we don't know how far away it is. That's the thing. And I don't think that it's like on the doorstep. It's not on the doorstep, but it's in the neighborhood, but not on your doorstep. So you've got time. All right. Let's see. Jack says, I'm less of a regret than Facebook's IPO. Let's see. Recession plus crash noise already subsiding. No rhyme or reason. Yeah. And that's kind of what I was saying. Like, it's easy. One of the things you got to realize is when it comes to influencers. So people on YouTube that are doing, doing the thing. They're doing the thing. If I were to put up a video and I put a thumbnail with, let's say it showed Toronto on fire and the stock exchange looks like it's cracked open, and I put a shocked face on there and I'm like, recession incoming. I'll get a lot of clicks on that video. I'll get a lot of clicks. I won't do that. I will use clickbait, but unless I can deliver it, what I'm clickbaiting, I'm not going to use it. So for example, if I say recession incoming and there's not a recession incoming, I can't deliver on that in a video. But some people will do that. They will put it up and say, and then, you get in the video and it's like, and then they're like, well, if we don't do all of this, a recession could be incoming. Well, that's a lot. That's really far from, a building broken, the TSX broken open in flames and, all chaos in a thumbnail. So, and does that cost me some views? Maybe it does. But does it cost me integrity? No, it does not. So I look at it that way. All right. Rory says, I'm a steady Eddie, not going short or long. Can't trade in the TFSA at the moment. Fair enough. Kiev and Kaz was trading at 1 a.m. last week. It was kind of cool for this night owl. Awesome. I love it. And Jack saying, I love the idea of 24-hour trading. That was my favorite part of crypto. Paul, let's see here. Paul says, worked 10 a.m. to 2 p.m. Saturday, then got home and shop vacuum up for the pink petals from earlier in the spring that fell on the patio and cement tiles. Then power washed 8.1 kilometers and 11,600 step later. Soaring out. Well, actually, you know what, Paul? It's interesting. On Saturday, same day, I had my shop vac out in the backyard, vacuuming up all of the tiny stones and mostly all of the needles from the trees, because we got. I don't want to say it's a carpeted background, but we got that grass, that fake grass, all over the entire backyard. So I was just vacuuming that up. So yeah, we were both vacuuming, shop vacuuming up our lawns. That's hilarious. Nothing in Canada is extended. Still add an extra half hour in Newfoundland. Oh yeah. Carney cares deeply about Canadians. Who knows? Who knows if politicians care at all? I never know. All right. Larry says, let's see. Rawr, I expect a drop in Tesla. That taxi comes out this week. Another sell the news event. Always hype, lead up, then drop for Tesla. Yeah, that tends to be the way. Buy the hype, sell the news type thing. Yeah, absolutely. Has Facebook ever split before? That's a good question. And you know what? I'll show you how to find out. Let me put it up. Oh, I already got it up. Hilarious. All right, let's go over here. We don't need Carney. We're going to go to Yahoo. So yeah, if you go to Yahoo Finance, and in this case here, Meta. All right, there we go. Meta Platforms. Now, if you go into statistics over here, it will show you the last split, and there's no last split, so they haven't done it. But here's another thing too that you can do as well in here. If you go to historical data, And you'll notice here you've got historical prices, but look at this. You've also got dividends and stock splits. So you could change that to stock splits, and then you could go, for example, you could go max. So that's their whole lifetime, but you'll notice they've got none. They've never done it. But if they had done it, it would be showing up in there. So for example, well, let's go to one that has done it. Not Tesla. Yeah, Tesla has. We'll do Tesla. In my mind, I was thinking strategy, and then I typed out Tesla. But we're going to go to Tesla. All right, and we'll go to historical data. Here we go. And we're going to change this to stock splits. And now that they haven't had it in that period, but now let's just go to max. And there it is. So there's this 2 different stock splits that they've had. August 30th, 2020, 5-1. August 25th, 2022, 3-1. So there you go. That's how you find out. Pretty useful. I just wish Yahoo Finance didn't a lot of functionality they put behind a paywall now, and that does still annoy me. Still annoys me. All right, everyone 50 plus. What do you think about Tal.to? I don't know what I think about Tal. Let me take a look here. Tal. All right. PetroTal Corporation. I have never looked at Tal. Now, this is a penny stock, so looks like they're pretty new. Let me just pull this out and see if they've been around for. Okay, well, yeah. Interesting. So I haven't really thought a lot about Tal. Now, oh, look at this. They got a nice looking dividend there, don't they? 9.231% quarterly. Makes me want to go in here and just check on something here quickly. Let's see. That's not bad. Their return on equity, 22.85%. Return on assets is high. Their debt, 13% debt to equity, not bad. This one's interesting. As you know, I normally shy away from penny stocks, but if a penny stock has the fundamentals, that makes me a little bit more comfortable. I'm probably not going to jump in, but certainly made me raise an eyebrow for sure. Oh boy. Absolutely. Yeah. No. There's been a lot of people, predicting, like, in our last recession technically was the pandemic. There was we technically had a tiny recession in the pandemic, but yeah, there's been a lot of talk about it. Now, we have had a bear market, and this goes to show, guys, you can have a bear market without a recession. Now, here's the interesting thing, and I don't know the answer to this. Have we ever had a recession without a bear market? I can't think of any. Not to say it's never happened, but now I'm kind of curious. I'm going to have to look that up later. Oh, boy. Yeah, and there were there were a lot of huge predictions after we came out of the pandemic of absolute chaos in the market, massive crashes, and we did get crashes. Now, here's this interesting thing. Here's what I like to do when I want to look at the overall health of the market. I will normally, just because it's a good way to visualize it, I'll normally go with VFV. So this is your Vanguard S&P 500. It's the same thing as VOO for those of you who are in the States. And I'll just pull this down to 10 years. And this is an interesting thing. So you can see here, here's the pandemic. And this is what I kind of want to explain here. And you know what, guys? I know what I want to do. I'm going to just highlight this. There we go. All right, let's go over to, that's not where I wanted to go. Let's see here. This might be it here. Yeah, right here. All right, I'm going to put this in here because I think this is kind of cool. I don't want to go to elements. I want to go to upload file. We did it as a screenshot. So we'll go to desktop, screenshot, upload, bang. Here we go. Perfect. This is what I want to do because I can draw on it. That's why. All right. So if you look, and I'm just going to get my drawing tools here. Let's get a pen. We'll go with, I want to go with red or green. I'm just going to go with, we'll go with a blue. We'll just grab a blue here. All right. So now, there we go. If you sort of look at the market before the pandemic, you can sort of see that we were on this bit of a trajectory. You'll notice that. You'll notice that trajectory. Now, this is why it's important. You'll look at this big bump here. So when you look at this bear market, all right, is it really a bear market? I mean, technically it is, or is it a correction? And what would we have that could be that correction? Well, what happened in here? I will tell you. We had COVID, COVID. So we had COVID. And with COVID, there were those supports. So everybody had all of this extra free money. And not just free money, they were locked at home. Free money and lockdowns, people were on YouTube. People were looking at things they normally wouldn't look at. And guess what? There was a huge influx of people into investing. So as a result of all of this free money, well, here's what happened. And what happened here? What happened here? The supports dried up. So when the supports dried up, we corrected back to where we should have been. That's just a normal thing. Now, this one here, this is not supports, but this one, I think it is. So, we saw the same thing. We saw it with Bitcoin. So with Bitcoin, all of that money going into Bitcoin and into crypto, we got the same kind of pattern, and then massive crypto winter. You went from 60,000 down to 20,000. Same general idea, but this here to me is inflated. This is not real, and that's just the way I look at it, because as far as I can tell, we've been in a mild bull market the whole time, even though this looked like a bear market, it kind of was like a mild bull market. And now, a mild bull market, this is a strong bull market. We've gone from mild to strong. Now you can look at this. This here is, gosh, that's Liberation Day. Liberation Day is looking like it's going to be a bigger dent than the pandemic. So what does that say about Trump? But we've recovered from that just as fast. Well, if you look, doesn't that look almost like the same recovery? Look at that. Except for in this case here, it happened all very fast. But, we'll look at this. We'll sort of see what's going to happen. Are we going to get a correction after this? Of course. Are we going to get another bear market? Of course. Will we get a recession? Yes. All of those things are going to happen. But when I look at this here, I kind of say, take that last little bear market, take it with a grain of salt, because when you look at it from the terms of all of the extra money pumping into the economy, it makes a lot of sense. It makes a lot of sense. All right, Paul, let's jump back over here. Let's see. When the economy struggles, government pumps M2 money and stocks and Bitcoin go up. Yeah. Well, that's exactly what happened, is all of that extra money pumped into the economy. That drove things up. Absolutely. Now, let's see. Exactly. This little housing dip is going to get ate up by subsidized immigrants. Well, not as many as we have anymore. All right. Let's see here. I love what Trump's doing. Meanwhile, the libs are all triggered. Kamala's on the doorstep. Oh boy. All right. Let's see here. Jay says, XEQT helps me sleep at night. Yeah, I love XEQT. So as you guys know, that is that's the iShares All Equity. They're investing in everything. You can't get, I don't think you could get more diversified than a fund like XEQT, or if you like Vanguard, they got VEQT. BMO has their own one. I think Fidelity, FEQT, has one as well. So yeah, definitely funds I do like. I like those a lot. Paul says, I'm glad my cash position is 12% STRK and 12% STRF. That are around 104, 105 per share. On Thursday, they got to $100 with possible ATM by strategy, but by Friday, they were back to 104, 105. Yeah, Paul's been doing a lot of good moves. Like, he's been playing Strategy and some of the variations of Strategy, as well as Tesla and NVIDIA. And he's been making some really good moves, really good moves. All right. Bismarcky says, I'm slowly turning my TFSA to more of a passive income, going to go 50% equity and 50% passive income. Nice, nice. I love it, Rory. I figure you had to vacuum up all the red tape that litters Ottawa. There we go. Oh, that's hilarious. That is hilarious. All right. Let's see. They just dilute the shareholders while they get to hold the real rare asset. All right. And let's see here. A whole bunch of conversation going back and forth here. Let's just jump ahead. What is everyone's number one position? Mine is NPI. So Northland Power. Yeah, absolutely. What is mine? It was Air Canada, but then I sold it as part of that swing because it was getting pretty darn big. Canoe is up there. Canoe is up there for sure. And yeah, I think it might be Canoe. Now I have to look. I have to look. Oh boy. Why did you ask that question? Why did you ask that question? All right. So let me take a look here. Oh, it's actually Armax. So, and that's that there is an ETF. So a REIT ETF. It's just a little bit. They're just ahead of Canadian Natural Resources, which is up there as well. Canoe is actually not as high up as I thought. Canoe is sitting. Let me see here. Yeah, Canoe is actually, well, boy, they've fallen below. They have fallen below 5%, 4.88%. I may have to buy some more Canoe now. Oh dear. All right, Andrew is all I. Let's see. I ask all about the low market cap stocks that have great fundamentals. I usually find them on Trading Central Value Analyzer. Not bad. That's a good one. I do like that one. For a penny stock, the fundamentals are fantastic. And I like that you're looking at the right fundamentals as well, Andrew. That impresses me. I like that a lot. Let's see. March 2020 took $14K from a line of credit and put into TFSA. When got to 16.5K, did a withdrawal to pay off the LOC. The line of credit. Yeah, not too shabby. Not too shabby. Let's see. Andrew says my number 1, 2, and 3 are, let's see. We got National Bank, Alvo Petro, and what is that? Proline Energy, I think. Nice. Let's see. Jack says, I'm 22. My credit's at 797. I have 20K of free TFA contribution room. Okay. That's not too shabby. Not too shabby. Oh, I finally caught up. That means I told you it could take an hour to get to the second story, but we're actually we're not there. We need to be in the right screen. There we are. So I mentioned a little bit about unemployment in the United States. So that kind of pulls in here a bit, but we did have our jobs report drop on Friday, and that's huge. That's huge. So unemployment, we've been thinking it's going to tick up, and it did. It ticked up a percent, taking us to 7%. Oh boy, that's exact. Now, here's the beautiful thing. This is what I do like. That's exactly what we were expecting. So the analysts had predicted 7%. We got 7%. So that's good. It's probably going to go higher before it gets better. So just something to keep in mind. We did add 8.8 thousand new jobs, and most of them, and this I thought was a little interesting, most of them were full-time jobs. Like we added 57.7 thousand full-time jobs, but we lost a lot of part-time jobs. We actually lost 48.8 thousand part-time jobs. Wages still sticking around 3.5% when it comes to increased wages. So here's something though to keep in mind. So when I talk about that 7%, keep in mind when we started the year, we had unemployment at 6.6%. So we've picked up 0.4% so far this year. And this is the highest since about 2016, other than, of course, the pandemic. The pandemic is kind of that it's that exception to everything. Now, one of the other things, and I mentioned this the other day too, people who are looking for work are taking on average a lot longer. So last year at this time, if you lost your job, it would normally take on average about 18.4 weeks for you to find a new job. Now it's up to 21.8 weeks. So not the best, not the best. Now, we did have some gains, mostly in the retail sector, and in the manufacturing sector is where we saw the heaviest losses. So that makes sense because of, well, you guys know, tariffs. And students are the other kind of the sad note on this. They are struggling big time to find summer work. So right now, 1 in 5 students between 15 and 24 is currently unemployed. Normally, that number is about half that. Normally, it's about 1 in 10 students who are unemployed. So this is pretty much, it hasn't been this bad for students since 2009. We didn't start calling it 29 back then. But 2009, that was right after, of course, the huge, the financial crisis, the housing crisis. So what can I say? We are still seeing a fairly strong economy. That's one of the reasons the Bank of Canada didn't cut the rate. So, and we're also, you know what? We're also seeing, I don't know if you've heard the word employee churn. So employee churn is basically, you know how when people leave and new people come in, that's churn. So, you know, it's kind of like that recycling of employees. Well, people are not leaving their jobs. People are kind of like a little worried and maybe a little grateful that they have a job. So they're not leaving. They're not leaving at all. Now this does roll straight into the next story. I'm just going to I'm going to bat this one out. It's a short little story. The Bank of Canada, we of course have a pause. Our pause is continuing. So the overnight rate still at 2.75%. And well, according to TIFF, the biggest factor for this is that they have a lot of tariff uncertainty, and it's really making it hard for them to sort of come up with any kind of forward guidance on where they think the economy or even the inflation rate's going. They also said that, you know, part of that reason as well, coming from that last story, is that we're getting these stronger and sturdier economic numbers, and that is making them feel that the economy is containing the damage from the tariffs, at least better than expected. Now, he did say that there could very well be a need for some further reduction in the policy rate if we see some weakening in the economy. And we are probably going to see that. Everything is kind of indicating that's where we're going. So right now, the next rate cut meeting for the Bank of Canada, July 30th. And right now, analysts are basically saying that, well, we got about slightly less than 50% chance that we might see a cut on July 30th. But there's a lot still left by then. And that'll change. That'll change as we get more reports coming in for sure. All right. Let's take a look here. Lisa says, VFV is my number 1 at 16%. Aduro is number 2 at 11% because of the recent gains, and that makes me a bit nervous. Then Google at 6%. So yeah, Aduro, they're the ones, I believe, that are doing that. They're working on a plastic, this thing that will eat up plastic. So I think that's, you know, I get a little nervous with new technologies, but I really like what Aduro is doing. And they have, well, gosh, let's head back in. Let's just take a look at Aduro again. I do like, they've made a lot, like they've had some really good gains here. Let's just see here. ADUR, come on, there you go. Aduro Clean Technology right here. So they're sitting at $10, or apparently in a pair of sneakers. All right, let's go pull this up here. All right, and you can see, like, they're not an old company; they're fairly new, but they've had this big burst. Now, as I will normally say, especially with a company of this size, When you get one of these, you're probably going to get some amount of retraction afterwards. And we're seeing a little bit there. They made it up to, 1073. Well, what was it? Actually, their high there was 1078. And now they're down to 10. So we might see them come down a little bit more. They might, they could fall. They could fall all the way down to maybe $8. But I do like what they're doing. I like their technology. I think there's a place for it. And I think there's a future for them. But this is just one of these ones that I would be more, I would just, I would watch them. I would watch them. Now, if you're thinking long-term and you want to put a little bit of money into this, there's nothing wrong with putting a little bit of money in and then seeing where they go. I have a feeling they're going to go well, but at the same time, they're new. So you still probably should watch them because sometimes you may have the perfect technology, but maybe somebody's going to come along and duplicate your technology, but do it better. That's always the danger with something like this. So we'll have to see. We'll have to see. All right. Jack says Google number 2. Nice. Let's see. Next week is my last week of EI sick benefit with overlap of gradual return to work. June 15th onward is no restrictions. Nice. Nice, nice, nice. Wow. It's always good. It's always good to be back. It's always good to be back. Bill says my number 1, number 2, and number 3 are NVIDIA. All right. Fair enough. Let's see. Propel Holdings. I haven't asked about it in a while because it's kind of languishing, but I've held it since $8 and won't let go. Oh boy. We're in here. We're in here, Andrew. We're in here. All right. Propel Holdings. Here we are. So they actually have, they haven't had that bad of a recent. They've been on what was that? On Friday, they were up 2.42%. So not too shabby. Let's start to back out. Let's actually back out a little ways. So yeah, Propel Holdings at one point, this was fantastic. This was fantastic, but they had a correction. That's normal. They are moving back up again. I do like Propel Holdings. They have, so basically, their dividend is fine, 2.128%. Let's go into their key data here for a second. All right. And over here, now here's one thing. They do have a little bit of debt. They have 118% debt to equity ratio, but look at this. Very healthy return on equity. They've also got a pretty healthy return on assets. So when I see something like this, I'm like, okay, well, I know that they're doing well, but they do have a good amount of debt. But what is that debt for? So that's where I would go to my next step. I would take a look and find out, if they're expanding and they're doing things that's going to create more business for them, then that's perfectly fine. So there can be good debt. And I have a sneaky feeling that might be the case with Propel. So I still like them. I think they're good. All right. Let's see. Paul says, when I started gradual return to work 4 weeks ago, I found out the student visa Indian employee had to return to India because our employer couldn't give him enough hours. Oh, well, there you go. There's more work for you, Paul. You gotta like that. Let's see. Jack says, I only got into stocks just before the election, April 9th. Seems like I timed it pretty good so far. All right. So you're brand new. Nice. Went too heavy on oil and gas, thinking Pierre Poilievre was a sure bet, though. It's funny. Pierre Poilievre looked like a sure bet right up until as soon as the Liberals officially got rid of Trudeau. Once Carney got elected in, things kind of changed quite a bit, pretty fast. So, yeah. If you had asked me in December, and I probably have said it, I've said it on the stream, that I had no doubt that Pierre Poilievre was going to take government. But, sometimes things can change. All right. Can you look at HPF? HPF. All right. Let's do that. HPF. Here we go. So Harvest Energy Leaders plus Income. Ooh. Guys. There's something I want to talk about. It's not Harvest, but we'll get there in a moment. All right. So this is the Harvest Energy Leaders Plus Income ETF. 289. I'm just going to pull this up here. They have been on a they've been on a bit of a downward slope here. So yeah, there is that. But look at this; they have a pretty good yield, 10.381%. So a very, not too shabby when it comes to an income ETF. Now, energy has suffered. So it's not abnormal to see this. So it'll be interesting to see. And I do like Harvest. I think they'll probably be fine. But there is something I wanted to talk about here. Let me bring it up here. Google, and all right, here we go. So Hamilton, guys, I was looking at this yesterday. Hamilton is looking to launch these 3 new ETFs. So this is for the income folk. So we got C Day, S Day, and Q Day. Now, what these are is they're basically, you'll see this 0DTE. So those are basically 0 day. So these are, these ones will write, basically options will be written on these funds that are same day. So options like right away. So that means they'll generate cash faster. Now, they have said in the documentation on this, now they're not available yet, guys, so don't get your hopes up too much. You're probably looking at about a week. A month. You're probably looking at about a month, I think, before you'll see these start to pop up. But there's a really good chance these could be weekly dividends. So there's a really good chance. Now they don't confirm it, so take that with a grain of salt when I say weekly. But they do mention here that they want to generate higher and more frequent cash flow. So more frequent than monthly, well, that leaves you with 2 options, really, bi-weekly or weekly. Now, a lot of these type of funds in the United States are weekly, so I think they're going to go weekly. So you're going to have the Hamilton Enhanced Canadian Equity Daymax, Hamilton Enhanced U.S. Equity Daymax, and the Hamilton Enhanced Technology Daymax ETF. So these could be really interesting for those of you who are who love that income. And what's not to love about getting dividends every single week? But once again, don't quote me on the week, but I'm pretty sure that's where they're going to be going. I'll be watching this here for sure, because I know you guys are going to be very interested in that. Right now, there's not a lot of data, but it's the Hamilton Daymax. This could be interesting. Hamilton, you're doing it again. Hamilton. Oh boy. All right. Let's see here. Bill says OPEC increasing their output will create excellent buying opportunities in our oil and gas companies if you're willing to sit and wait on them. Yeah, absolutely. 100%. That's what I've been doing. That's one of the reasons that CNQ, so Canadian Natural Resources, one of the reasons that's pretty high in my portfolio right now is that I've been stacking a little bit while they're down, because oil's not going to be down forever. It never is. It always comes back. So we may be sitting at WTI may be sitting at 60 something a barrel right now, but you will see a $100 barrel again. Mark my word on that. That's going to happen. It may not happen this year, but it will happen. So yeah, I think they're safe bets. I think they're safe bets for sure. All right. Joe is in the house. So USCL, QQCL, HHIS. So we're looking at tech. So yeah, so HHIS, of course, when you got those Harvest Single Income ETFs, so HHIS holds pretty much all of them. So it is a fantastic, I like it. I do like it. Now, mind you, a lot of people who got in at the beginning got in on the hype. There's a lot of people who are still in the red in this one. But it does have a massive dividend. And I'll pull this up. Let me pull this up here for you guys. So HHIS. So here we go. Harvest Diversified High Income Shares. And we'll just pull up the, oh, has it been that long? The 6 months. So yeah. So there was a lot of hype when it first came. And then, of course, we had a tech crash as well. So here's that hype. Then it came down. Then, went back up. We had a bit of a tech crash. It's slowly making its way back up again. But here's the beautiful thing with this one. It is a monthly dividend of 25 cents per share. That works out to a yield of about 26%. So that's not too shabby. Now, mind you, here's a funny thing. A lot of the volatility that we are seeing in tech now is actually makes it a lot easier for Harvest to get premiums on all of the different funds that are in there. So, for example, they have a single share. I believe they've got a single share Tesla, single share Nvidia, and a lot of the different tech companies. Those are all being held by this one, by the HHIS. So it does give it. The only problem I would say with it is that it's heavily diversified tech. So if tech's in the dumper, so is this one. But right now, so far it looks pretty good, and their dividends have been pretty reliable. But let's see what happens if we do get a bear market. Let's say we do get that recession in 2026. Let's see how this behaves. I have a feeling it'll still do okay. They might cut that dividend a little bit. If things get bad, but for the most part, I'm holding some. I'm okay with it. I'm liking it. I'm overall liking tech. Like, I think, even though we've had a little bit of a slowdown, things are starting to rebound now, and I'm very excited for the whole prospects of AI. And some of the companies are starting to show investors how they're making money with AI. So I think they're going to be fantastic. I think they're going to be fine. All right. Let's see. Aduro, according to Lisa, Aduro has been around for over 10 years, and their technology is patented. Yeah. Oh, yeah. No, absolutely. But you can patent your technology, but if somebody finds another way to do it, that's not your technology, but another technology that does the same thing. That's kind of that thing I was sort of mentioning for as we move more into that direction, but they're probably fine. I do like Adoro. I do like them. I really like what they're doing. All right. Sorry, I just meant to say PRL is one of my 3. Don't worry about it. It is fine. Let's see. I hope they don't charge a lot for management fees. That'll be the interesting thing, Jay. That'll be the interesting thing. As you know, that I don't have a clue yet. I have a feeling, though, you're probably going to be looking at, I bet 2%, something in that vicinity. That's what I'm thinking. All right. And we got Max in the house with a happy Sunday, everyone. Fantastic. And this is great. We finally caught up again. That means that we can do another news story. So we're still kind of in the all of the trade stuff. It's still adding up. But Canada's merchandise trade deficit hit $7.1 billion in April. It is the largest on record. Oh boy. Up from basically it was about 2.3 billion in March. So this is the tariffs 100%. So overall our exports dropped 10.8%. That's the lowest since June of 2023, with exports to the US plunging, oh boy, a full 16%. Yikes. And that's of course tariffs. Good old tariffs. Exports of our automobiles and also auto parts, they fell 17.4%. with a 22.9% drop in cars and light trucks, which are directly linked to those U.S. vehicle tariffs. So, oh boy, yeah, we saw some pretty widespread declines. Consumer goods were down 15.4%. Food exports, like, everything from bread and chocolate and frozen goods were down 15.7%. Industrial machinery down a whopping 22.5%. Forestry down, and building materials down 18.5%. Metals and minerals were down 8.8%. Now, another little issue in there is that our loonie's been actually doing pretty good. So that stronger loonie, it is, it's reduced the value of exports priced in USD. So That's had a little bit of an impact as well. Speaking of imports have also been down. So total imports have fallen by 3.5%, particularly, once again, vehicles, machinery, electronics, consumer goods, all of that fun stuff. Now, really, this is kind of interesting. All of our exports to everybody but the United States, they actually rose by 2.9%. So that certainly helped soften the blow a little bit, but it's nowhere near where we need it to. They are expecting, so a GDP impact is absolutely likely thanks to all of this slowdown. And economists are now expecting no GDP growth in Q2. And CIBC is actually forecasting rate cuts in July and September due to the trade and labor softness. So if you guys remember earlier, I mentioned that right now it was less than 50% chance for a rate cut in July, but CIBC is thinking they're thinking it's going to happen. They're thinking it's going to happen. Yeah, the trade shock is basically forcing a rethink of Canada's near-term growth trajectory. Tariffs. You gotta love the tariffs. And well, you know what? Since we're at the tariffs, let's quickly let's just get this going. Let's just get it going. The trade war front lines. Let's get through it. I've only got one thing that I really want to talk about in the trade war front lines, and that is the deal. This deal between Carney and Trump. So apparently they've been talking a lot more than we realize, and that's fine. I'm okay with that. I mean, I just want a deal done. I want to get, the economy at least a little bit back in better shape. But they've been talking about a potential framework for a deal, so don't get too excited. A framework is probably what it's going to look like, but there's still, I think, a lot of stuff that's going to need to get ironed out. Now, some of the stuff that we know is in this framework is the United States is going to want us to boost the amount of U.S. content in autos. So more U.S. parts. They also want to improve their access to the Canadian critical minerals. So they're after our minerals. So they want something in there that says that. And they also want Canada to spend more on defense, of course. Now, we also know that there will also be provisions in there regarding energy, border security, and of course, oh boy, the fentanyl. Yeah, as well as steel and aluminum, because those tariffs we've got to get an exemption. We can't, 50% is crazy. So that's kind of what that framework's going to look like. It looks like it's all Canada given. No, I didn't see anything where the US was giving up anything other than all of their retaliations. And as I mentioned before, that whole retaliation they're doing for the digital service tax, I need to see that in there too. Let's get that in the deal. And here's the thing, even if it's just a temporary deal, even if, we do this for a couple of years while we start building stuff, once we've got that infrastructure in place and we got a lot more going on when it comes to our own critical minerals and our trade avenues for them, then it's time to renegotiate again. And well, heck, maybe if we wait 3.5 years, we can renegotiate with somebody who isn't Donald Trump. So just something to keep in mind, for sure. All right. We got through a couple more stories. I like it. All right. Oh no, Jack, where are you that you lost power? Rory says, I fell asleep. What did I miss? I don't know how long you were asleep for. Joe saying, I'm ready to swap my HYLD for the new Future S-Day. Yeah, I can see, like I said, I think these new Hamilton ones are going to be very exciting. I imagine when they announce those, I know a certain covered call type YouTuber out there that probably had a very good day seeing those. So I won't mention who. I know some of you have come from, have found this channel after that individual, but we'll leave that be. We'll leave that be for now. Let's see. And I'd rather not use anything relating to my real name. And anonymity. Nothing wrong with that. All right. Tyrone. It is wrong to suspect that because of Canadians buying more Canadian products, the upcoming earnings should be better or great for some companies, particularly in consumer goods. Or sorry, not it is. Is it wrong? It's going to help, but it's not going to make up for everything. So, I mean, it's it's basic math. If Joe Q Canadian normally bought all of his alcohol from the United States and no longer does, well, probably because he doesn't have a choice. It's all been pulled off the shelves. He's now buying all the Canadian stuff. So that money is getting back into the Canadian economy. When you buy American, some of it still does get back into the Canadian economy, like taxes and stuff like that. But more of it gets back into the Canadian economy when you're buying that. So it does help, but it's not the best. And if you keep in mind, a lot of a lot of American products that are cheaper because of the way they mass produce them, the consumer may still end up paying more for the same stuff because they're being forced to buy Canadian versions of things that perhaps we're not mass producing it as much, but maybe we can mass produce a few things a little more if people are buying them. Now also removing the trade barriers, allowing things to flow more freely across the country. I think that's going to have an even bigger impact on that as well. All right. Rory says, Trump, I'm altering the deal. Pray I don't alter it any further. Oh, Darth Trump. What can we say? Let's see. Carney dropped the retaliatory tariffs on USA April 16th, but didn't tell Canadians. Really? I have to look into that, Paul. I've heard that whispered a couple of times. I need to look into that because I thought they were still ongoing, but I will double check. I will double check on that because we definitely need to figure that out. Let's see. He looked so weak at the meeting with Trump raising his hand to speak up in defense of Canada, while the Chancellor of Germany looked jealous. I'm jealous of Germans. I think there was a lot of hesitancy, I think, when he had his meeting at the Oval Office. He did stand up for us a few times. I did like the whole some things are just never for sale. And I liked how he brought that about with real estate. That worked. But there were a few times that I thought he could have spoke up for sure. And I don't know if it was a situation where he was still like picking his battles opposed to just fighting back on everything. It's like, let's find the things that are more important to fight for. So, as bad as it could have went, I think it went better than I was anticipating. I'll give him credit for that for sure. Rory, it seems that when everyone talks about Hamilton ETFs, I just doze off. Okay, fair enough. All right, let's see. We did have a business case with Germany on our LNG, but guess who stomped all over that? Oh, yes. Well, we also have with Germany as well. We got a deal that was worked out on hydrogen, on liquefied hydrogen. So I know they were going to set up this big thing in Newfoundland, a big wind farm that was going to be turned into green hydrogen. That was apparently they were involved in that as well. But we'll have to sort of see how that goes. But oh boy, what can I say? What can I say? All right. We're slowly getting there. Talking about deals. So Dougie Ford in Ontario, he got his Bill 5 passed. So this bill, it aims to accelerate development projects, particularly in mining and infrastructure, by establishing what they're calling special economic zones. So these are zones where pretty much, certain provincial and municipal regulations can be bypassed. It grants the province or the provincial cabinet authority to exempt designated projects within these zones from existing laws, including, and I can see this ruffling some feathers, environmental assessments and municipal bylaws. Now, it did ruffle some feathers. As I said, I could see it happening. The First Nations leaders are not happy, and they are arguing. They're arguing that Bill 5 undermines treaty rights and lacks adequate consultation, potentially violating Section 35 of the Constitution Act. So we've got a little bit of controversy going around on this one. Also, environmental groups, and yeah, we knew they would get involved. They warn that the bill weakens protections for endangered species and could lead to unchecked development in sensitive, ecosystems. Well, yeah, there is that. There is that. I mean, but I can understand why you might not want a politician to decide what's endangered and what isn't. Yeah, I can understand that for sure. Now, a lot of critics are labeling this bill as a bit of an overreach of executive power, allowing the cabinet to make a lot of these significant decisions without any kind of legislative debate. So I understand that. But here we go. The government responded to all of this. So basically, the Ford government contends that the bill is necessary to streamline project approvals and bolster Ontario's economy, especially in response to some of these external trade pressures. This is all about that ring of fire, this ring of fire development, the importance of accessing those critical minerals. They're just huge. They're huge. That's a lot of money there. That's what the government's going for. Now, there are some anticipated lawsuits that are probably going to hit in the news eventually. I know a lot of Native communities and environmental organizations are challenging the constitutionality of the bill. So we will see some pushback. First Nation leaders have even said there's the possibility of some direct action. So we're talking protests and blockades. Wonderful. Let's find a way to get this bill so everybody's a little bit more happy. One of the things, and I can understand this, in the need to get the bill through fast, I think the Conservatives in this case, they didn't consult a lot of the shareholders. So, in the sense of the natives, they should have done that. They definitely should have. First Nations are really, 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 really important to include them in on this. So that might be one area. Let's hope that they can get this all ironed out, because we certainly need to get the development of these minerals. We need that, we need this for the economy. And this is going to tie in, of course, eventually to that big Canada bill. So it's all coming. It's all coming. What can I say? Oh boy. I don't know. Sometimes I just don't know, but let's get it. Let's make it happen. That's what I say. Let's make it happen. A says, which will be more important for us, oil or natural gas exports in the future? I think they're both important, to be honest. I think oil will probably be a bigger important. Well, I think oil will be bigger initially, but I can see it switching over to natural gas down the road. But right now, they're close. They're close. They really are. And Bill here is saying that if he had to guess, he'd say natural gas, since it powers electrical plants, and electrification is a big deal going forward. Yeah, absolutely. All right. And Jack here says, I can't stand Doug Ford. I want to be liberal. Yeah, I've heard that before. Rory says, agreed. I do have more natural gas companies than oil in my portfolio. I'll keep C&Q, of course. And what's best is if you have a company that does both oil and natural gas, then you're in good shape. You're in good shape. Jack likes CVE and C&Q. Nice. Yeah, C&Q. I love C&Q. Absolutely. And Cenovus. I mean, they're good too. All right. Now, let me get to we're almost through the news, guys. Believe it or not, we're almost through the news. We have 2 stories left. All right. So Amazon is looking to train up a force of robots to deliver their parcels. So coming soon to a doorstep near you. We have Amazon's plan to use robots. There we go. So Amazon is they're working on software for humanoid robots to deliver their parcels. So these robo delivery units, they're going to be trained at a large humanoid park, which is basically it's complete with an obstacle course. Sounds like a video game almost, but yeah, they're going to have a humanoid park, obstacle courses. It is still being built, so we're still a little ways off. But after they have had their training, they're going to be taken into the real world, and they're going to start doing test deliveries. They're not. They're really not ready for prime time. Yeah, that's bad. I know. But for initially, when they first come out, they're going to be driven around by Amazon drivers. I imagine eventually they'll probably use self-driving vehicles. They'll take the people completely out of the whole thing. Now, if you think they won't, let me just tell you this. Currently, Amazon has a robot army of over 750,000 that are working in their warehouses. And it is estimated that they are involved in over 75% of all orders that come through Amazon. So you order something through Amazon, somewhere in that supply chain, it's been touched by a robot. So, all right, we got one story left. I thought we'd go with something a little bit less, a little more lighthearted, kinda, sorta. Well, that's hard to say. All right. Oh boy. So Rogers has announced that they are going to be cashing in on The Price is Right. They are looking to create a Canadian version, and they've already tapped Howie Mandel to be the host of. They're thinking the name might be The Price is Right Tonight, because it's going to be a 1 hour nighttime show. They're going to do 12 1 hour episodes to start, and that they're hoping to air it on City TV by the spring of 2026. So basically a little bit less than a year from now, we might have our Price is Right Canada. So that'll be interesting. All Canadian prices. Wow. That means like you can watch one episode and the next episode, the same item will be a little bit more because of inflation. I don't know. It could be very interesting. And this is kind of that thing. We've been talking a little bit about the telecommunication companies and that they need to do something. They need to pick a lane for growth. And both Bell and TELUS have been looking at AI centers. It looks like Rogers is just sticking to the television with, with City TV and with new shows, new ideas. And of course, there's sports gambles. So could be interesting. So The Price is Right, Canada. Are you guys going to watch? Are you going to be like me? At least check out one episode and see if it is something I am interested in. All right. Before I just close out the news, guys, coming up this week, we got nothing. Really not much happening in Canada. But in the United States, we do have the CPI and the PPI dropping on Wednesday and Thursday. Earnings-wise, very slow week for earnings. Not a lot of big companies, but we do have Dollarama dropping their earnings up here in Canada. So there we go, guys. That is the news. We are it's now up to you guys. It's now just chat. It's just chat. News is done. Love it. Stormtroopers. Oh, you gotta love stormtroopers. I mean, if I was ever being chased by a large mob of people, I would hope they were stormtroopers because they won't hit me. That's what I would say. Goodbye, Canada Post. Nice knowing you. I know. Canada Post, they've got no money. And that's the whole issue right now with Canada Post is that they got no money. They got no money. There's nothing you can do with it. It's like, I think they need to come up with something different. It definitely has to be something very, very parcel centric, but we'll have to see. We'll have to see. Jack is saying, I'm just saying in theory, if I lost my job to a delivery robot, I would definitely become a porch pirate, steal the robots and part them out for computer stores. There we go. Oh, that's all. That's probably the best answer of the day, Jack. Our best comment of the day right now. I love it. Rory says Howie Mandel is the worst host for this kind of deal. He has a phobia of touching people. Yeah, absolutely. But I mean, how many big Canadians do you have, right? At least with Howie Mandel, he's got a lot of fans in Canada. A lot of people will tune in just because of him. Bismarcky says The Price is Right Canada. You win a toaster. I love it. Yeah, win an all expense paid trip to Newfoundland in the winter. Watch the icebergs. Yeah, that'd be funny. Yeah, it'll be interesting. It'll be interesting. I mean, like I said, I'll check it out. Curiosity, if anything. Verena says, hi there. If wanting to invest in income ETFs, high dividends, add a Canadian, would you suggest SCHD and RRSP or another Canadian ETF in the TFSA? I want to invest in the US ETFs. What do you think? All right. Interestingly enough, if you are an income investor, your TFSA is where you want to be doing it. Now, when you're, except for, let me just, I gotta have some caveats here. Obviously, if you got a high dividend paying US stock, yeah, you probably don't want that in your TFSA. So especially when we're talking something like SCHD or any other higher one. So those, yeah, and the RSP, it is a safer place, provided it stays that way. And I think it's going to be safe. But outside of US dividend stocks in your RRSP, and I have a video coming out on Tuesday about this. Believe it or not, going with income stocks in your RRSP is not the most efficient way to grow that fund. Now, there's many different ways. Like I've already, I will say right up front, your TFSA should pretty much always trump your RRSP. So if you've got tons of space in your TFSA, you probably don't want to be adding to your RRSP unless, of course, it is those US dividends and you're trying to protect the taxes. Or if you're trying to defer some taxes. So let's say, for example, you made a lot of money one year and you just don't want to pay because you're in a higher tax bracket, you don't want to pay those taxes. Yeah, absolutely. Use your RRSP for that. But for general growth, so when you retire, when you hit retirement age, ideally, you want that TFSA max, because then if you are switching to an income portfolio, that's where that income is going to happen. Now, if you're in a situation where you have that full and you are putting stuff into your RRSP, you're going to make more money overall with dividend growth stocks in your RRSP. Because here's the thing. If you think about it, if you got a really great ETF that's paying you, that's paying you a dividend of 10%, but it's not growing a lot. Well, and sometimes sometimes that's the situation in these income ETFs. They don't grow a lot, but you're getting a nice dividend. Well, that 10%, if you put that in your RRSP, the whole 10% taxable, 100%. So there's no tax advantages to that. It's just straight up taxes. And mind you, that the stuff that you create in your RRSP is not giving you a tax, a tax rebate. You're not getting any kind of taxes off if it's generated within that in that RRSP. But here's the thing. Let's say you take a simple total return stock that's returning you, between its dividends and its growth, it's returning you 20%. Well, when it's all said and done, if you have that in your RRSP, you're getting 20% on that every year, whatever the percentage is, opposed to the 10% from that dividend one. Because the dividend one, it's not like you can pull the dividends out. You're going to pay full 100% tax on them if you do. No difference than if you're pulling, if you sell a couple shares of whatever stock that's in there and pull that out, you're still going to pay 100% of whatever that is. So it all boils down to, in your RRSP, it boils down to math, 100% math. So whatever gives you the highest total return, that's what you want in your RRSP if you have to use it. Because keep in mind, you want to fill up that TFSA first. Or if you do have those US income stocks, yeah, that's a perfect place for them. But keep in mind, there's probably US dividend growth stocks that will have higher total returns. Well, depending on them, there are some crazy ones out there. Like if you look at some of the Yield Max, I'm still not 100% sold on Yield Max, but you might get some higher returns in that way. So just something to think about for sure. It is all about, like I said, it's all about getting the maximum total return when you're looking at that RRSP. hands down, because it all becomes taxable. So it's all on a level playing field. There's no advantages to income in your RRSP. All right. And Jack, yeah, max out your TFSA before touching the RRSP. And yeah, here's another good point too. Yeah, unless it's company matched. So yeah, when I talk about priorities of investing, if your company, if you have a job where they're like, hey, we'll match your investment up to whatever the dollar amount is each paycheck into your RRSP, yeah, take it. That's free money. That's 100%. That's a total return of 100% right away before you even start. So yeah, absolutely. All right. Let's see. I know about the CX rate and also the covering fee, but still, as a Canadian, can there be an issue? Right now, the way the tax treaty works, everything is safe in the RRSP. So no, you don't have to worry about any of the fees. But with the big, beautiful bill, it doesn't specifically say that it's going to take that away from it, but it leaves things gray enough that if they wanted to take away the RRSP, if they wanted to take that away from having a shelter status, they could do it. It wouldn't take much for them to do it. They wouldn't need a crazy new bill to do it because it's gray enough in that bill that they could. I don't think they're going to, but they could. So just keep that in mind. Let's see. Canada Post and the NDP remnant should have a campfire and tell stories on how they both lost. Oh boy. All right. Let's see. Hello, Candace. Can I get your thoughts on Marin Energy? Okay, let's get in here. All right, Marin Energy. All right, here we go. Marin, whoops. Hello, what happened? How did I get on another website? I must have clicked on something. All right, let's try this one more time. MER, Marin Energy. Here we are. All right. So once again, as you guys know, it's close. It's close enough to a penny stock that I get my shackles up a little bit. I'm just going to pull up the 3-year on this one. Now, at one point they were higher. They used to be up around, they used to be up in the high 2s, but they're technically they're not a penny stock, but they're what I call a penny adjacent stock. Now, when we take a look at this, all right, let's see here. There we go. They have a crazy dividend. So 11.467%. It's 3.7 USD quarterly. So, it is a big dividend. Sometimes I wonder, but let me take a look. And this is what I need to see down here. And this is where I run into some issues right away. Look at this. We got a negative return on equity. So they're not profitable at this moment. At this moment, they're not profitable. They're paying out a dividend that might not be sustainable. So I get a little worried about that. I don't know what their debt to equity is. Now, it shows nothing. It doesn't show anything here, so it might be 0. Let's actually, you know what? Let's see if we can get that from Yahoo. All right. I'm just going to mer.to. Here we go. All right, let's pull it up here because sometimes Yahoo will have it here a bit more. All right, let's see here. Total debt to equity ratios. So, okay, they do have some debt, 35%. We're looking at that here. But this is the part that I have a hard time with, this return on equity in the negative. The return on assets also in the negative. So obviously, if we pull this up here, you can see their earnings per share is in the negative. So they're not sustainable at this point in time. If a company is not sustainable and they're giving away a huge dividend, I get a little bit worried. I wouldn't put my money in it. Hopefully they can fix this. Hopefully they can turn this around. If you do like them, though, definitely do more research because, maybe there's something going on that I'm unaware of behind the scenes. But right now, there's enough warning bells for me that I wouldn't touch them personally. And Paul says not watching The Price is Right tonight. Not watching any TV on a guide. All right, fair enough. Canada Post robots next. Yeah. Then the robots can go on strike. That would be kind of funny. Let's see. Good. I can't wait to start up my first computer store. I hope they use NVIDIA chips in those delivery robots. Oh, you'll get more for the delivery, for sure. Guys, we are at the 2-hour mark. So if you got your last minute questions, get them on in here. Let's see what you guys got. I'm going to have some coffee when you guys are typing away. Oh, so good. All right. So guys, as I mentioned, on Tuesday, we are going to be doing a RRSP video. That'll be coming out Tuesday. Those of you who are channel members, though, you'll be able to watch that one day early. So you'll see that tomorrow afternoon. We do have another live stream coming up on Wednesday. So the market close, and I want to sneak in a market open one of these days. So that I don't know if it's going to be this week, but it'll be before the end of June, definitely. Paul says Sunday Bitcoin pump 106.4K. Wonder if Trump will announce just before July 4th that the Strategic Bitcoin Reserve has some amount of Bitcoin. That would be interesting. Yeah, absolutely. Yeah, Bitcoin does tend to do really well here on Sundays, I find, in the afternoon. The Sunday Bitcoin pump, not too far from the truth. Rory says, I remember when Superior Propane was a steady company. They fell hard recently. I owned them for a couple of decades. Oh, gosh. It's funny. I never hear of Superior Propane anymore. I remember they used to be pretty big. Absolutely. Thoughts on Google for someone holding at least 5 years? I don't hold any ETFs or any other Mag 7 tech stocks, only Google. Here's the thing. I was worried. I was a little worried about Google as AI was kind of taking over the search field, because a lot of people they're using AI instead of going to Google to search. But Google has, Google's AI has absolutely hit the stage hard, and I'm not as worried anymore. So I think Google's going to be fine. Obviously, Google owns YouTube too, and I think YouTube has a pretty bright future still. So I would say I'm pro Google. I think Google's going to be fine. I would call them blue chip. I think they're only going to go up. I think they're a safe investment. They're kind of one of those stocks that you can set and forget. So I do like it. Verena says, so I still have a lot of place in my TFSA. That means I should use it even with US ETFs. Not if they're big dividend payers, though, Verena, because those in your TFSA, the whatever, right now it's 15% withholding tax on those dividends. And if the big beautiful bill passes, it'll be 20% in January, 25% the following January. So, and you can't get any of that money back. So there is no foreign tax credit for your TFSA. So that money's just gone forever. So, but now if you're holding an ETF that is more of a growth ETF with very small dividends, then I'm usually like, I wouldn't care. Like, quite honestly, if it's less than a couple of percent, I'm usually not super concerned myself, depending on what my function is for that ETF. If my function is growth, then I don't care. Or the stock, for example, something like NVIDIA. I would have no problems holding that in my TFSA because they have a dividend, but it's like a crazy low dividend. And and a small, tiny portion of a crazy low dividend disappearing, it's not going to bug me. Whereas if it's a big dividend, yeah, then absolutely. Those are ones that I would put, if you want to hold them, if you want that exposure, those are ones I would put in either your RRSP or even in a non-registered account, because at least then you can apply for the dividend, the foreign tax credit, and get some of that dividend back. All right. So see, not to mention Waymo, Google Cloud, etc. They own a lot. Definitely not a monopoly. Well, yeah, I know that there's I think there's more antitrust in head for them, but I think right now they're trying to take Chrome. I think that's what the goal is, to take Chrome away from Google, but we'll see if that happens. All right. Let's see. PXT to start to climb. All right. Would you do a stream reviewing portfolios, or for a donation review portfolios just for fun? Well, Jack, I will review portfolios. Here's how I do it. If you, and here, let me drop this in. I'm going to drop this link in here. All right, so this here is my link to Blossom. The Nightbot should give it here in a moment. If you head over to Blossom, hook up. So you got two choices at Blossom. One, you can either let its API look at your portfolio. That's if you're on Wealthsimple or Questrade. Or if you don't trust it, you can always just manually enter what you hold, and that'll create a portfolio over there on Blossom. So if over there on Blossom, follow me and direct message me and let me know. And then what I'll do is we'll bring it up on, like, for example, if you went over there today and messaged me, or even, early in the week and messaged me, we can probably look at it next Sunday on this week on this show. So yeah, if you bring it up, I'll have no problem, but I need to have a couple of days so I have a chance to look at it, because sometimes you may have a stock I've never seen before, and I want to be able to at least look it up, figure out what that stock is, and look a bit of it at its fundamentals before we go on the air type thing. But yeah, that's the best way to do it. Best way to do it for sure. All right. Verena says, okay, thanks. What about HHIS in a TFSA? Okay, so in this case here, so HHIS, and this is kind of how you have to look at it. Its dividends are not, nothing's being taken from the dividends it's giving you. So that's all fine and dandy. But when we get in further, deeper, let's go down the rabbit hole a bit. Each of the ETFs that it holds, so we'll go with, some of them are not a problem at all. Like you take Tesla. Tesla doesn't have dividends, so there's not even an impact in there. But if you look at something like Meta or NVIDIA, where they have small dividends, well, not 15%. It depends on what deal Harvest currently has with the IRS. Like some companies are able to get lower deals where they're only paying like about 5% withholding tax. I don't know if Harvest, worst case scenario, Harvest is paying 15%. So when Meta pays Harvest their dividend, the IRS is taking 15% of that. So that all gets worked into the calculation. Doesn't matter where you hold it, it's going to impact you the same. Now, mind you, when you look at most of that money that's coming to you from HHIS, most of it is not dividends. Most of it is everything from return of capital, all of the premiums on the different covered calls that are written on all of the various ETFs that it's holding. So you're really not going to get impacted by holding it in your TFSA. Quite literally, it's a tiny fraction that, and it's not you, it's Harvest is losing before they come in and calculate everything. So everything that they calculate and tell you, that's what you're getting. So you don't even have to even think about it at that point. All right. And Rory, yes, I know. I checked it. I checked it before the stream, because if it was working, I was going to be to jumping in. Okay. Oh, that's cool. I've never seen that before. Yeah. So here, let me pull it up here for you. So right now, though, to enter it in, you need to use it on an, where's my Blossom? Here it is. So right now, to do it, you need to, like we have a desktop version. It works fine. You just can't edit your portfolio yet. So here's the edit portfolio. That function, they're still adding to the desktop version, but it works fine on the phone version and the regular app. So what you can use like on your iPad or your Samsung Galaxy or your, whatever it is you're using. But yeah, once you get in, this is what you're going to see. So this here is the 0 to 100K challenge. This is that portfolio. So you can sort of see right in here, it brings up everything. Now, when you do it, you notice how this here has dollar signs. We're not going to see I will not see dollar signs. All I'm going to see is, and let me show you. I'm just going to go home. I'm going to pick a random portfolio here. You know what? Let's go in here. Oh, there's King of Day. I'm not going to grab King of Day. You know what? I'm going to grab somebody who will not mind me grabbing them. Just give me 1 second here. Let's go to the home page. And I'm going to grab Dear Banana Bread. Dare Banana Bread. Where's my thing? Normally there's, you know what? I'll grab Mo. Mo is a YouTuber, so Mo is not going to be upset if we look at his portfolio. All right, so when I look at it, all I'm going to see is this. You notice here, in most cases, geez, look, he only has 3 stocks. VEQT, or sorry, XEQT, VTI, and VT. But I'll just see the percentages. But that's fine, because then we can come in and we'll go through the stocks. We'll look at them, all of that fun stuff. I can also look at, general idea of your diversification, all of that fun stuff. And if you have particular questions as well, throw those up. We'll go over it. No problem at all. So yeah, pretty cool. Actually, I was going to actually go to Brandon, but Brandon doesn't have that much either. He's got, five now, Kits Eye Care, and all of these ETFs as well. So anyway, yeah, absolutely. Jack, just set yourself up. Follow me, because I will not see you otherwise. And even when I watch stuff, guys, I always go here. I go to the notifications, and that's how, see, here's King of Day. That's how I knew King of Day had some news, because I saw King of Day in here, and I'm like, oh, I have to go read what King of Day said. So that's what I do. I go through here and check things out that way. So anyway, yeah, that is just followed. I have to set it up though. Yeah, just set it up. Let me know, and we'll do it. We'll do it for you, Jack. No problem. All right, and Reverend Ramirez has been pretty happy with my relatively recent position in DB, so Douche Bank. I have to be careful how I say that. Been thinking about rearm EU and Germany. You know what's interesting, guys? If you do like access to the Germany market, the CDRs that CIBC offers, they've got, I believe, four different German companies that you can get CDRs for. So that's kind of cool as well. But in this case here, DB, I think that's available. Well, let me give me a second here. I thought that might be available on the TSX, but I could be wrong, but I thought, maybe I am wrong. Yeah, I'm not seeing it. All right. That's fine. So yeah, unfortunately, I don't have a lot of access to it. But what I'm looking, there we go. Let's pull that out of there. One of the things that I am looking for is, I'd like to see more. Like, I'd love to see a Canadian broker that has access to the European market, as well as the UK market, and also Australia. Heck, why not? Let's give me Japan too. Give me Japan and Asia. Why? Just give me the world. Give me the world. I would love that. But what you can do is, let's say, for example, you did want exposure to a particular company. So India is basically the fastest growing. You can just type India in here, and you'll see a lot of these India companies. So here's XID. This is the iShares. All right, let's pull it up. iShares India Index ET. I actually did a deep dive on them at one point. I'm going to pull up the 3-year, but you can sort of see. Let's go. You can go to the 5-year. You can sort of see they've been doing pretty darn well, like kind of the similar stuff, but India is on fire. I have a feeling that that's not going to change, especially we might have a little bit of road bumps with the tariffs, but once all of those tariff things get ironed out, I think India will be back to doing what they do best. Now, the biggest impact, I think, to India, though, is India was poised. They were poised to take over a lot of that manufacturing that China normally does, the really cheap stuff. And with the US putting all of these tariffs and trying to get people to build things in the United States, that is impacting things a bit. I know Apple, with all of the issues between the United States and China, Apple started looking to make a big significant chunk of their iPhones in India. So that's pretty cool. All right, now Fred, MSTY. So that is MicroStrategy. Now I believe there's 2 MSTYs. They're both MicroStrategy, but I believe we'll start with the Canadian one. I think you're asking about the Canadian one. So here we go. This here is one of those harvest ones. So You remember HHIS we were talking about early? This is one of the ETFs that it holds. So this case here, the Harvest MicroStrategy High Income Shares ETF. We'll pull it up. And as you can see, remember how I always say, I always talk about that, you know, the initial interest. There it is. There's that interest spike. It's one of the reasons that even when something like this comes out, I'm not going to buy it in the first couple of days. I'm going to wait till it, and now it would have settled down to about here. And then of course, you know, there was other issues. There were other issues with crypto and such. But now it's starting to recover a bit. But yeah, it has a nice dividend to it. Look at the yield on it, 42.204%. Crazy, but I do like it. Now, there is another MSTY. It's a US one from YieldMax. Now, it's a synthetic covered call. So it writes options on strategy now. They used to be MicroStrategy, on strategy, but they don't actually hold it. So that's why it's called a synthetic covered call. And they also have a pretty, well, let's just take a look. Their yield is crazy. I think their yield is even more crazy. Here it is right here. So their yield is right here. Get this, 142.187%. Absolute craziness. So, you know, there's a lot of people that love these YieldMax. I'm a little leery on the YieldMax ones. I'm okay with going with you know, with like the harvest ones, but I'm a little bit hesitant. Now, in addition, so we did talk about MSTY. There's also MSTE. So this is the same one, but they take it one step further. They add leverage to it. So that takes, in this case here, well, their distribution yield, actually it's lower than I was expecting, about 12%. But you know, it's kind of an interesting thing. So that's a lot of these ETFs, so these single company ones that Harvest has, they have them in two flavors, just the regular one and then the leverage one. So the leverage one will apply roughly 25% leverage, so you will get more, but you'll also lose more. So it kind of is an interesting thing that way. But mind you, you know, these are all new. And in some cases, if we do go into a bad market, some of the dividends will come down. And I believe their documentation actually showed the worst case scenario for a lot of them. So you can go in and take a look. Well, with MSTY, let me see if I can find that, just because it is kind of interesting here. Let's just go Google. Let's see, Harvest MSTY. All right, we'll see if I can find their page here. Here we are. All right, and let's see here. They had it here at one point, so we'll see if it's still here. Let's see, distribution. NAV, market close, alarm, management fee. Actually, that's not bad, 0.40%. Interesting. I thought at one point in here I saw it, but I looked at it a long time ago. But there was something in here at one point that showed. Let me go to the performance distribution. No, portfolio breakdown. All right. Well, I'm going to go to the product sheet just to see if it is here. But I thought maybe it wasn't this one, but I know at least a couple of them had a smaller dividend amount showing that was kind of their worst case. But holy cow. Yeah, I saw it a long time ago. Yeah, I don't know where it is, guys. Unfortunately, but what can I say? All right, let's get to this next one here. Let's see. I love looking at some of the great Canadian companies versus the SPY, the SPY. Okay. Cool. Let's see. Zyborg said, bought MSTY at the absolute peak rocket surgeon move. Another year of divvies, and I might just break even. Oh, yeah. That's why I always say when something releases, sometimes it does go up and it stays up. Sometimes, not often. Most times, I would say more than 80% of the time, it goes up and comes right back down. Wait for it to come back down. You'll get a better price. You'll get a better entry point. Just wait. Trust me on that. Because you guys don't want to. You don't want to. You don't want to pay more than you have to. All right. So let's see. Alimentation Couche-Tard, Dollarama, WSP, MEQ, CSU blows the SPY away. There we go. Let's see. I quickly commented on your U.S. tax issues blog on Blossom just to let you know I'm still there. Nice. Nice. Awesome. I meant the U.S. stock. That's why we did both. Let's see. I think MSTE is better. There we go. Yeah, we were talking about that. Dollarama. I love Dollarama. Dollarama is awesome. And earnings coming out this week. And let me just give me a second here. Let's pull this. Whoops. Let's bring this back up. All right. Dollarama. Let's pull it up here. All right, here we go. And I just want to look at the 6 months. So, yeah. As you can see, the second quarter is going to be in this area in here. So they did okay. I have a feeling these are going to be half decent earnings for Dollarama. So, if you have Dollarama, you might get a little bit of a bump this week when their earnings come out. Elsiba says, I'm afraid of MSTE, MSTY, and all MicroStrategy related ones. I think it could be a time bomb. Why not go with BCCL or HBIX instead? Yeah, I mean, that's the thing. And this is kind of one of those things. So when you're looking at some of these time bombs, and I'm the same way in a little bit. Like I'm fine with them. I think strategy will be fine. But I put my horses behind HHIS because they're holding, well, all of them. That way there, if one of them does, like if strategy tends to bottom out, the others might be fine. So there's nothing wrong with that. And like BC, actually let's pull that up. BCCL, here we go. All right. So this here is your Global X Enhanced Bitcoin covered call. And these are kind of neat. Like I still need to do a video on some of these new Bitcoin ones. So yeah, this is a good exposure to Bitcoin. This one is good. I looked at this one. I'll show you the one I actually went with when it comes to my Bitcoin exposure. I went with HBTE right here. And this here is the Harvest Bitcoin Leaders. So it's got a bit of everything in it. Let me just pull up. There we go. So it's one of those ones, how I say normally it comes up and it comes down. It came down, but look, it wasn't very much in this case here. And then it came up and then we had that, we had a little bit of issues with Bitcoin. Bitcoin came down and that's fine. But yeah, this one does follow it pretty well. It's also got a nice looking dividend here. You can't see it here, but I believe, oh my God, what is their distribution? I don't know what it is anymore, but I thought something tells me I don't know what the distribution is. So what can I say? But yeah, it is. Well, let's find out here. HBTE. I'm like, why is it not giving me any information here? Let's see here. No, HBTE ETF. All right, let's see if we can get a little bit more here. All right, Bitcoin Enhanced Income. I'm looking for this one here. All right, here's what I'm looking for here. Let's see here. Yeah, 33 cents. So that is their distribution is 33 cents per share. I don't know what that is. Let's see here. It doesn't actually give me a yield, does it? No. Probably because it's brand new. It's brand new. And this is going to be like their first dividend is coming out soon. So it's not bad. It's not bad. So I'm liking this one. It's covering, like it's holding, it's got like Coinbase in it. It does have strategy, Galaxy Digital. It's got a bunch of them in here. Actually, I think, do we have the portfolio in here too? We don't. Of course we don't. I need more information, but yeah, it does have a lot of. Yes, I thought I had it in here somewhere. Oh yeah, here they are down here. So you got strategy, you got the Bitcoin, basically IBIT. So that's a Bitcoin ETF right there. Galaxy, Coinbase, Block, Mara, Riot, CleanSpark, BitDeer, Hut 8, love Hut 8. So it's got a whole bunch in there. So I'm kind of excited. I kind of moved my play over that way. Anyway, let's go. Let's come back. Let's come back. Jack says, let's see, the one holding we have in common is CNR. You hold 7% in CN. I hold 8.5%. Yeah. Well, when CNR kind of gave me a couple of really good buy points. So I am a little over diversified than I normally would like to be, but it was a situation where it's like I can't ignore the price. So that's kind of what happened. Let's see, never mind. I sold my CNR to buy a Toyota. Oh, there we go. Yeah, yeah. Sometimes that's what stocks are for. Sometimes you need a Toyota. What can I say? All right, guys. Oh boy. All right. We will be back again on Wednesday, of course, for the market close and video dropping Tuesday tomorrow for the channel members. Until then, guys, enjoy the rest of your weekend. I I can't wait for Wednesday's show. Let's see what happens. Until then, take care, everyone. Bye.